Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video, where I'm going to be talking about finding opportunity in the order flow, around the highs or the lows of the day. And today specifically, I'll be talking about the lows of the day because we had been in a pretty quiet session, slowly grinding lower most of the session until Nvidia came out and market jumped off the back of that. But there were some great opportunities to buy off the low of the day. So before I jump in, if you enjoy my videos, don't forget to subscribe and click the notification bell so you don't miss any new upload. And if you find today's video helpful, be sure to hit that like button and leave a comment sharing your biggest takeaway. I love hearing your feedback. Your support really does go a long way in helping me create more videos. All right, so let's jump into today's topic. Again, today was FOMC, so it was a pretty quiet session, although we were grinding lower. Cash opened at 8:30, and we came down. We touched our low that we had made around 7:33, 7:34. Bounced off that low that we had made earlier at 8:48, went up a bit, but again, kind of a tight range. Our range for most of the morning was 49.73 to 49.33 and a quarter, 20-point range. In the S&Ps is quiet now. But again, it's in context of the market. We're trading around 5,000 in the S&Ps. When we're trading 1,800, 1,900, a 20-point range was a big range. But, with where we're trading now in the market, 20-point ranges is considered quiet. FOMC came out and we pushed down to new lows. And then we took off like a rocket ship. And, Nvidia news came out, or earnings rather came out. And that stock jumped up about 6%, in the aftermarket. But there was interesting things happening in the order flow down here. Now, I'm not, suggesting that your congressman was loading up on S&P futures, but what made this load a much better buy than any of these other lows that we had put in. So let's jump into it. Let's go take a look at our footprint chart. I love the footprint chart because it's a reading. Gives you what traded on the bid and the offer, right? The volume traded on the bid, the volume traded on the offer, and it's from that information that you can make good trading decisions. All right, so let's just go back to cash open. Well, here it is, cash open right here, 8:30, and again, kind of quiet, right? I mean, it's a FOMC minutes day, so we're going to be waiting to see what the minutes come out as. And again, based off the minutes, it seems that a lot of the participants were concerned about the risks of cutting interest rates too quickly. I think that's why they sort of took it off the table. But really, I think the real concern should be that they stop hiking rates too quickly. Nowadays everything moves in like quarter points. You could still raise, 0.05 or something like that. But again, I do think we need higher rates. But anyway, let's take a look at some of this order flow that was coming in here. So, 8:49, we hit that low again. Sort of, I hate to call this a double bottom, because it's within, 2 bars. One bar hits the low, next bar opens right near there and then trades that low. But if we look earlier, right, what time was that low made here? It was made at 7:35. Okay, well, the volume was off that low. It was 306 traded there. Then you came down, you hit it again. It's 183. This time, though, cash is open, right? And volume is going to be much greater. And what was interesting is on this push into this low, we got some decent volume, 8,743 contracts, right? And even the next bar, 7,395. And, it was sort of our heaviest volume since the cash open, where we traded 12,000. And the bar after that, you got, 9,000. But everything else was pretty quiet, okay? So heavy volume into the low, couldn't go any lower. Strong negative delta. Again, couldn't go any lower. Bear in mind, though, it is Fed day. So what does that mean? If you got this heavy selling coming in, right? Strong delta, minus 2,300. That's strong. This is on a S&P 1-minute chart, or rather 60-second chart. 60 seconds, 1 minute, it's the same thing. Can't push it lower. Okay, then the next bar opens up. We hit that low again, 22. So we trade in the first time we hit that low after the cash open, 183. Now remember, earlier we traded 306. That was at 735. Now and that's pre-cash, right? Pre-cash opening. Now on a bar where you trade a hell of a lot of volume, 8,000 743. It only trades 183 on a bar where there's heavy selling. What does that infer? Well, it infers that, sellers aren't interested in taking it lower. You don't have a lot of sellers coming in. There was some strong selling earlier. You see 1100 here, 400, 400, 400, 600, 400, 480, 183. Just sort of scrolling back here, this little bar here, trade 306, 1,500 contracts, 306 traded at that low. Now, you got less traders. Then even the next bar opens up. 22 lots trade down there. Okay. So, what's that? What do you think is happening? First time you hit that low, 306. Second time you hit that low, 183. Third time you hit that low, 22. Are people interested in selling down here? No. Aggressive buying comes in, you get a nice positive delta, 737, and you just go sideways to a little bit higher. I mean, I'm not going to say it didn't rally because, where this bar closed up here, 76, it did trade all the way up into the mid 80s, from 76 all the way up into, the 83 in here. So it's a 7-point move. Okay, that's decent. But again, it's a Fed day, so you're not expecting big moves. 7 points. And remember, we came into the session, we had a 20-point range. So you just made back, that's a third of the range right there on this little move up off that low. Okay. Is it decent? No, I mean, a lot of people would be happy with 7 points. But again, what was some of the signs? Well, the strong selling and can't push the market any lower. But more importantly, the selling into this low was getting weaker just by watching the volumes traded at those lows. Okay, a little bit of aggressive trading coming in here with a couple stacked buying imbalances in here. And this bar's actually got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Is that 10? Yeah, 10 buying imbalances in the bar. So there's some strong aggressive buying. But again, it's a Fed day, so you're not looking for a big trending move prior to the Fed minutes coming out. So to get 5, 6, 7 points out of that move, I think would be decent. Okay, then, we just sort of drift down again, sideways, do make another run up here, back up into the mid 80s. So this time we get a little higher to 86. But then let's take a look at this low that we made down here at 1115. Okay, make a new low by 1 tick. 86, 1, 86 trade on that first bar at 1114, 1115. 1 contract trades at that low. Again, not a strong low, right? It's almost like traders are coming into this low, pushing it down, seeing, hey, is there, we're going to take out the low. Can we trigger some stops? Maybe this market could sell off some more. It doesn't. Okay, this time it rallies back again from this low, basically goes from about 75 and a quarter, up to 77 and a half, sideways down into pushing now into some new lows at 11:45. Now again, what time does the minutes come out? They come out at 1 o'clock, right? So, we're just sort of drifting around lower. It's not like if you were to see like strong selling coming in ahead of the Fed minutes, I might be a bit worried. But to me, it's nothing overly strong that you'd want to all of a sudden turn short and get short right through the Fed minutes. But okay, so we come down here, 11:44, push down into some new lows, start bouncing up. Now on this move up here, now this I thought was interesting because you have some decent signs of momentum again, just like you had earlier with the strong aggressive buying, 2 buying imbalances here, 1, 2, 3, 4 here. Now you're starting to get some single prints, 1 in here, 0, 8. So this market's got some momentum on its side, right? It's starting to go forward, it's starting to rally up. But again, it's now 11:47. You got about an hour and 20 minutes, not even before the FOMC comes out. So are you going to be looking for a major move? No. I mean, if Fed comes out and says something weird, yeah, you could probably get a major move, but are you going to bank on that? No, I think you'd be a fool to try and do that, but that's me. I err on the side of caution. But there is some signs of momentum coming in here with the lack of counter trade in the thin print showing here. And again, you get this nice little move coming in here. Again, not a big major move, but again, it's that you're coming into that time before the Fed minutes come out. So do you want to be doing it or not? I don't think so. Then here, right, 12:02, right, market slammed in here, some strong selling. Okay, again, timing now, you got less than an hour. You do make a new low. We go from 70 down to 67 3/4, so about, you know, two points in one tick. Start rallying up. Okay, boom, getting ready again. I've been around the markets long enough to know it's Fed day. Just sit back and wait to see what comes out. You know what the Fed says. Okay, boom. Fed comes out, kind of a nothing burger, surprisingly. You know, in terms of market movement, here you got this market popped up a bit. You got, you know, some buying imbalances. You got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You got, you know, a bunch of single prints, thin prints in here. 3, a 2, a 0, a 0, a 7. So you got, you know, 1, 2, 3, 4. But that's to be expected, right? That's just sort of the knee-jerk reaction after the FOMC minutes come out. Give it a time to settle down. Market does settle down, right? One, you know, here you can see it's not going crazy like you normally would see it on a Fed day. So we come down into these new lows. This new low to me is nothing. There's no strong reason to be getting long here other than, you know, the nice positive delta and, you know, the buying imbalances. But, you know, buying imbalances you're going to end up with a nice positive delta anyway. And it just sort of goes sideways, starts drifting down. Again, we start hitting new lows again down here. Now, these are divergences, right? You got a new low with positive delta, 74, 64, 28, 4, 6. So you hit it once, twice, a third time. The next 2 times after this low, it's very thin volume. It's 4 and 6. You got some bullish ratios, a 72, a 44. You know, you can buy those. I like those. I like that trade setup. It's the divergence plus a bullish delta. A bullish ratio. Market does rally. Again, it goes from about 65.5 here. We'll call this 65.5. Gets all the way up to about 70, but not a big move. Okay, now again, we're at our low. And to me, anytime you have a reason to be buying at a low is going to give you a good trading opportunity. And to me, I felt that this was a decent buying opportunity. Unfortunately, it only went up about 5 points. Okay, and then came back down, starts testing these lows in here. And then boom, you come down, you make a new low by about a point, all the way down to 61 1/4 in the next bar. So we go from 762 3/4 down to 61 1/4, so about 1.5. Starts popping up again. It looks like it wants to rally before it hits this new low here at 59. And then you start really seeing the bullish momentum coming in here. And then the market takes off. And in this bar here, again, I thought this was a good buying opportunity. It only rallied about 5 points. This movement is just, it's kind of normal looking at a low. It's nothing that's really going to get me interested to buy it. But off of this low here, I felt that it was very strong momentum coming in here. Why? Because you make that low, okay? So you're coming in hot into these new lows. Coming into this low, strong negative delta. Again, minus 685, and then minus 361 at the low. So you got strong negative delta at the low. The nice big positive delta, and again, still a positive delta, but you got 5 buying imbalances. But look at in here, right? You got stacked buying imbalance as well. 0, 0, 1. You've got 0, a thin print, a thin print, a thin print, stacked thin prints. Now, sometimes when you get stacked thin prints, it's the result of stacked buying imbalance. Maybe you're still not convinced yet in here. And then 3 bars later, 1, 2, 3, you get 8, 0, 3, right? So you're getting more thin prints coming in off this low. And more importantly, what do you see? Okay, you're seeing these selling imbalances in here. So what does that mean? It's green candles with selling imbalances. Well, it's volume that is absorbing whatever aggressive selling is taking place in the market. 100, and again, 34 against 6, I could ignore that, but 194 against 45, 130 against 5, these are all little signs, okay? And if you were to get long off of this bar or even off of this bar here, similar things that happened earlier are happening in this bar. You're talking 67, and then it just runs all the way up into the 80s pretty quick. Now, again, I'm not saying that, you would have held it all the way up to new highs up in here at, in the 90s, because the cash closed right on the high and hold it through NVIDIA. This stuff, you're not going to be trading through anyway. But there was signs in here with the order flow. And this is where having good software is going to help you, because, look, if you had software that can just draw this stuff for you, draw these areas of importance on here. Where is it? Thin prints, okay? Enable thin print here. And it's just going to draw out those zones for me. Right? It's going to, whether it's a zero print, in this case, I got it set pretty, what do you call it? Pretty strict at, oops, I'm sorry guys, I'm doing a upgrade on the software, so I'm testing it now on here. We're going to be releasing the upgraded version of Orderflows Trader soon. But one of the things that I have to make sure I got it disabled on it when I'm testing it is the fast data processing feature to draw out the zones properly. But you're going to see it appear in here, right? These zones from what we call thin prints being drawn on your chart, right? It's just going to give you that visual, so you don't have to sit there and think, does this qualify as a thin print or not? Because you're going to know right away if it is, so you can catch those moves like this right here, boom, 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 as soon as it's taking place, right? Because that's really what you want to be doing, right? Is you want to be buying as close to the low as possible based off of what's taking place in the order flow, okay? That's the whole point of using order flow. Take advantage of it as quickly as it comes, because at the end of the day, when you're looking at order flow, right, what it is what's trading in the market right now, okay? When do you want to take advantage of it? Well, if it's information that's coming to you right now, you want to take advantage of it as quickly as possible. Okay, so here we go. Sorry about that. I had to pause the video there for a second because I had an extra setting I had to disable. But you can see it right here. Thin print, 0, 0, and 1. Right? Here's another 0. And these are coming in right off the low. That is a sign of momentum. So you want to be picking up on that, as quickly as possible. And again, there was one here, but again, off these lows, do you want to be buying this? This one, definitely not. Next bar doesn't even go any higher. Again, similar thing. Next bar here doesn't go any higher. When you're looking at a thin print, which is a sign of momentum, you want to be taking advantage of it as quickly as possible. So the market's got to start moving, right? This is the part that a lot of traders miss is, I got some bullish order flow in here. I got 1, 2, 3 buying imbalances. I got a thin print in here. I got to get long. And then what happens? The market reverses and goes down to make new lows. Well, why would you be getting long if next bar can't even go any higher? Okay. But let's take a look here at some of these other lows here. This one, again, no thin prints, no signs of momentum coming in. It is ratio and divergence. You get a little bit of a move, nothing spectacular. Here, this low off of this low, here, you got one thin print. Okay, is that enough? I do think you want something more juicier, right? And this one was to me much juicier because you got 1, 2, 3 stacked neatly on top of each other. I mean, whether it was spread out, the fact that you got 3 coming in here, 1, 2. This 8, again, I have my thin print set at 1 right now. If I had set it at 3, I'd probably have a couple more, right? You can see in here, where is it? Thin print, right? Volume of 1. If I wanted to set it a little bit higher, 3 or even 9 or 10, there'd be more. But look at this 2 here, 1, 2 here, 1 here, right? Again, if I had set it to cast the net a little wider at 3, I'd have 2 in this bar as well. Let's go back to some of these other lows here. Again, off this low here, right after the Fed. No, there's none in here, right? And usually that's a time where it's pretty volatile. Market should be moving. 1145 off this low. Again, do you want to take it? You know, so close to before the Fed announcement, because again, you know, you got to realize any signs of getting long off of the order flow or technical analysis, or however you're looking at the market on a Fed day, you got to take into account, you know, how long can I hold this? Am I going to hold this until the Fed starts talking or not? You know, in my opinion, it's going to limit your possibilities. Let's go back to this other low here at 8 here. Again, nothing major in here telling you really to get long here. You got 1, 2, 3 thin prints all in the same bar, right when the market was popping up again from 81, you know, up to 84.5, and then just went sideways on you. So basically, the point I'm trying to make today is on this video, 1, don't trade ahead of the Fed minutes. I mean, you can. I just don't think it's prudent. But buying off of a low, right? Again, just focusing on the lows of the day here, right? Here, nothing major to buy. No, when I say nothing major to buy, I mean no major reason to buy it in here. But off of this low down here, there was a decent reason to be buying it off here with the sort of this triple bottom, single prints on these lows 4 and 6, bullish ratios, bullish divergences. You get a little bit of a move up, comes down, makes this new low, but this low here at 222, right off of this low, and again, doesn't have to be right on the low. The bar afterwards give you a nice, beautiful buy signal to catch that move up, right? And it went from, you know, the low all the way up to the highs of the day where the market closed at. Okay, so, you know, finding your opportunities around the edges of the market, meaning the lows or the highs of the day. Watch the order flow. Watch what's happening, right? Is there a sort of this shift in what's taking place in the market? In this case, there was a shift in momentum. We saw the trading picking up, and the market had a nice rally off of that. All right, everyone. So I hope you enjoyed this video. Sort of took me a little bit longer to get to the point that I was trying to make, but I hope you found this video helpful to your understanding of order flow, and, you know, the importance of watching how the order flow is building around the low of the day. All right, everyone. So take care, and I'll catch you guys on the next video. Bye-bye.